Is there really a secret to proper risk management in trading? Sure, we've all heard of low risk, low reward, high risk, high reward. But in this video, I'm going to be showing you some tips how to get low risk, high reward from trading cryptocurrency futures, derivatives, responsibly and safely. We're going to kick things off by looking at leverage, and I will be demonstrating all of this through my favorite crypto trading platform, which is Bybit. If you want to check out Bybit, there will be links in the video description down below with bonuses and trading fee discounts as well. Guys, hit the like button. Let's get straight into it. What is leverage trading? Now, leverage trading, for those of you that aren't familiar, is a way of magnifying your position. Now, it can magnify your win or your losses. So what do I mean by magnification? So let's think about it like this. We're currently trading Bitcoin against USDT. So let's say, for example, and you can see in this account at the moment, there's $207. Let's say we wanted to use 25% of our account balance. So that's going to use about $50 thereabouts. There's some other calculations involved, but let's say it's a $50 trade. Now, we're currently 10x leverage, which means the actual value of our trade is not going to be $50. It's allowing us access to $500. It's a little bit like buying a property. If you wanted to buy a $500,000 home, you put down a down payment, say 10%, $50,000, and you've got access to that $500,000 investment. The only difference is a property, you're not going to be buying, selling, and you're not going to be in a position unlikely where you're potentially going to get liquidated. Yeah, I mean, there's another conversation about that. People have foreclosures and so on, but just to give you that simple example. So, very important risk warning. Now, the more leverage you use, the closer your liquidation price is going to be. And of course, it also means the more money you can make more quickly and the more money you can lose more quickly. So some of you will be wondering, well, what is liquidation price? The liquidation price is the price that an exchange will automatically close your position because you do not have the margin available to fulfill that debt anymore, because it is a debt. You are essentially borrowing money from the exchange. You only have $50 in this example. You're putting on a trade that's $500. The more you borrow, the closer your liquidation price is going to be. Now, let me show you an example of how liquidation works. So in this example, using a 10x leverage trade, $50 is the cost, but it's a value of $500. Bitcoin at the time of recording, and hopefully when you're watching this, it's going to be far, far higher. Let's hope it is. Currently trading at $17,243. If we go to open a long here using market order, in the example of this video, I'm just going to be using market orders. I do have a full Bybit for beginners video. I'll put a card up there if you want to learn more about trading in more detail, but this is just about how to use leverage safely, responsibly. So the liquidation price estimated at the moment is $15,605. That means if the price falls to $15,605, we will be liquidated and we will lose that entire $50 value. So it's important to mention there's two different types of leverage or margin you can use. One is isolated, the one I'm currently in, and the other one is cross. You're probably wondering what the difference is. If you use isolated, it says very clearly, under isolated margin, a specific amount of margin, i.e. the initial margin, is applied to a position. And position margin can be adjusted manually. So in the event of a liquidation, you may lose the initial margin and extra margin added to this position. So in a nutshell, isolated is safer than cross. You're basically ring fencing the initial amount that you put in. So it's a much safer way than using cross, which gives you the use of your whole portfolio balance as opposed to just that position balance. So I always recommend to use isolated, unless of course you are an experienced trader. So I'd very much recommend isolated. So let's look how to use leverage and in a real case scenario. So in the example of this 10x, $50 cost, $500 value. Let's say, for example, we wanted to put a 20x leverage trade. Those of you that want to work it out, maybe pause the video and think what's going to happen when I go open long. Is it going to make the liquidation price nearer or further? Well, we can see now that the value of that trade is $1,000 because it's 20 times 50. And you can remember before the liquidation was about $15,600. It's now gone up by $1,000. So our liquidation price is much nearer. But what it is going to mean is that the price that we can start earning much quicker if the price goes up. If the price goes up, our percentages are going to be much greater. We're going to make a lot more money a lot faster. But of course, there's more risk attached to it. So when you use leverage, you need to work out when you should use it, how you should use it, and to what leverage amount. Now, you're probably wondering, well, how do I know what leverage to use? Well, you should always do your technical analysis first, and you might have some key levels that you're watching on a chart, for example. So, and this is basic, and this is only for demonstration purposes. This is not relevant TA, especially when you're watching it. But you might identify that there's a key level of support at $16,900 for the Bitcoin price, and you want your stop loss below that daily level. And let's say you were targeting up at this daily level, which is $17,800. So the first thing you're going to do here is you're going to want to work out how much leverage you can utilize without having your liquidation price above this $16,900, because you don't want to get liquidated before the invalidation, before your analysis is invalidated, right? So we can go back to our exchange knowing that, yes, we can't have 16,900 or below. We know that with this estimated liquidation price at 16,484, well, that would take us down somewhere down here. So that's actually quite a safe level on the basis of this trade. So in this situation, 20x isn't that bad. It is relatively sensible, and it's a fair amount of leverage to use. So you could press confirm here, and you could open that trade, and you can see right now that trade is open at 20x leverage. Now, during a trade, you can alter that leverage. So let's say, for example, your trade was going in the right direction, it was doing really, really well, and you felt that actually, I no longer need that safety net. My new invalidation point is, let's say the trade broke above this point, bounced off it, started moving up, and you were happy to move your stop loss up to 17,800 to lock in those profits, and you only needed an invalidation at somewhere around 17,700. Well, what you could do in that scenario is increase your leverage even further. And I'm not suggesting you should do this, but I'm just saying you could do this, and that is going to basically bring your liquidation price much, much higher, from 16,484 all the way to nearer this point, which means you could take on more leverage, but responsibly. And it's always more responsible to not take on big amounts of leverage. But of course, human nature is fear and greed, and of course people want to make money trading. So I'm not saying don't take on leverage, just make sure you can afford that leverage, and you know where you are in your trade so you don't get wrecked, most importantly. So there is another way that we can help work out what leverage to use, and literally no one uses this on trading exchanges, but it's free, it's available. It's the liquidation calculator. So you go to that calculator here, you press liquidation price, and you can work out what your liquidation price is at any point by putting in your leverage or proposed leverage, the quantity and entry position. Very easy to use, guys. And if you found this valuable, please do share it with a friend, share it in your communities. Once again, this is Bybit, really good trading platform, really easy to use, and I have a Bybit for beginners tutorial. Use the link in the video description if you want to sign up for that bonus. I'm an affiliated partner. I don't get paid for making this video, but you can support the channel by using this link. You'll get a bonus, I'll get a bonus, and of course you'll continue to save on the fees, which is great as well. Thanks for joining me on this one, guys. I hope I provided value. Any questions, leave them in the comments down below. I will get back to every single one of you. See you on the next video. Take care. Bye-bye.